that new age leadership is quite aligned to the new energy reality. And they are not the ones who will sit around and argue the case for the traditional system being the best. They are people who are now taking things in their own hands and making investment decisions which are in line with the new energy reality of those countries.
Welcome to an episode of Strategic Conversations. We host insightful discussion with top business leaders and top thinkers. Today, we're hosting Mr. Ashish Sethia, the global head of commodities, energy, and environmental markets for BloombergNEF. Mr. Sethia will also be a speaker at the Houston Strategy Forum's upcoming Energy Evolution Symposium. We're excited to host him. And he promises our discussion is going to be really different than what we are used to hearing. So I'm looking forward to hosting him. I'm Ravi Kathuria, the president of the Houston Strategy Forum and author of the management and leadership book, How Cohesive is Your Company, and author of Happy Soul, Hungry Mind. Strategic Conversations are hosted by the Houston Strategy Forum. If you value these conversations, please hit like and subscribe to the Houston Strategy Forum's YouTube channel. Today's episode is sponsored by Cohegic, a management consulting and executive coaching firm. Thank you all for joining us today. We're looking forward to a great discussion with Mr. Sethia. Ashish, I want to thank you, sir, for being here today. I want to thank you for being a part of our August 31st Energy Evolution Symposium. This is going to be a great discussion. I've had a discussion with the other speakers, and having you there, I'm going to love it. I think our audience would love it. So Ashish, start by, I shared what you do for Bloomberg, but give us more color on it. Share with our audience what really is the scope of your role. What is it that you look at day to day and over the long term?
Sure. Thanks firstly for having me here, Ravi. Delighted and great pleasure to be joining the forum on 31st as well. Looking forward to it. I'll be just coming back from G20, B20 events from India, so I hope I can bring some perspective of what emerging economies are thinking into the conversation on 31st.
No, absolutely. We'll be looking forward to it. And if you happen to have a meeting with with Prime Minister Modi, tell him I have to go and report to the Houston Strategy Forum.
I'll do my best to report the deliberations in Delhi.
Yes.
But for the uninitiated, BloombergNEF or BNEF is a strategic research provider covering global commodity markets and disruptive technologies that drive the move towards a low-carbon economy. We work with commodity trading, corporate strategy, finance, and policy professionals to help them navigate change by essentially assessing decarbonization pathways for sectors like power, transport, industry, buildings, and agriculture. My role within the firm is to manage your commodities, energy, and environmental markets coverage, looking at everything from what's happening in these markets next week to what might happen next 20, 30 years. Yeah. So wide time horizons we look at. And I also manage all of our research across the Americas region.
Ah, wonderful. Wonderful. Well, you're the perfect man to tell us what is happening with energy evolution. Where are we headed? You have the perfect vantage point to see what is developing in energy evolution. What are the mega trends that you're seeing? Trends that may be moving fast and trends that are moving slow but will have a profound impact.
Sure. So, right before I talk about kind of the future, let me just emphasize what's happening right now in the markets, right? So I think in the energy industry, we are living in a world of alternate realities. On the one hand,
are these connected with alternate facts?
Not really facts, alternate universes, perhaps. But on the one hand, oil demand is rising to a record 102 million barrels per day or thereabouts this year.
Yes.
On the other hand, investment in clean energy hit a record $1.1 trillion last year, according to my team's estimate. Similarly, when you look at the global power generation industry, the industry is adding a record amount of solar and wind power generation capacity on power systems and power grids globally. But at the same time, global coal consumption hit a record 8.3 billion tons last year.
Yes.
And to top it all, we are seeing record heat, ocean and surface temperatures right now, and droughts in certain parts of the world. And you and I live in Texas, so we know what we're talking about.
Yes.
But in some other parts of the world at the same time, we are seeing massive amounts of rainfall and flooding, right?
Yeah.
And so there are differing signals if you look at the markets in the global economy right now, which make it difficult to predict the future. And I think it's making the jobs of energy companies, their investors, policymakers, and society quite difficult. So that's where we are. It's a world of realities which don't seem to be adding up together.
Yeah, I want to begin to dissect that, because in that 1 minute or 90 seconds you shared so much that could take us an hour to absorb. But let's start dissecting. You started with the oil markets, right? And oil consumption is hitting record highs, 102, between 100 to 103, based on which figures you look at. That is higher than what we were consuming in before the pandemic, right? How come then we are not seeing a shortage in oil? Because OPEC has cut back. U.S. production, who's U.S. being one of the largest producers, right? It is not producing at the same level, over 13 million barrels a day, which it was doing before the pandemic. So the U.S. has cut back, OPEC has cut back. Russia, if he can really believe what is going on, they claim that they're not shipping as much. If demand is this high and supply has cut back, how is that possible? Is this demand really there? Or is there other supply? Is it Iran supplying? Is it Venezuela supplying barrels on the black market? How are we bridging that gap? Because that is not evidenced in the market dynamics.
Sure, and I'm guessing we'll kind of have more time to discuss the details on 31st. But yes. I think the few things that have happened. Firstly, it is true that inventories have been used up quite a bit. There have been dips in the SPR and so on, which yes. have cooled the market. And if you see, the SPR reserves are still kind of lower than what they used to be, not yes. only in the US, yes. But also in some other countries, right? Also, strategically, various Asian economies have built SPR kind of reserves, which they dip into now if needed.
Yes, China has over 1 billion barrels of oil in reserve.
Yeah, and so China and even India kind of tries to manage the markets a little bit, although the reserves there are
I do not know how much reserves does India have. Do you know those figures?
I can check and bring them on 31st.
Yes, please.
Yeah, and they're much smaller than obviously China or the US.
Yeah, I would think they're probably a tenth of the size of China, because India doesn't
correct.
have. Yeah,
correct. Those kinds of things are helping the market. The other thing is, the supply has reconfigured to meet the global needs, right? Including the needs of all the sanctions and so on, right?
Yes.
So we know for a fact that the Russian supplies into Asia have increased quite significantly. There are also times you talked about the black market. I don't know what the right phrase to use there is, but
right phrase.
but you see a lot of crude going into places like Malaysia or Singapore, which is then kind of recalibrated and relabeled and kind of sent to other parts of Asia or other parts of the global economy. So I think all those things help. And at the end of the day, oil markets have a way of balancing at certain price levels. And the price that we are seeing now is obviously there is a war premium built into that price. We kind of calculated the numbers a while ago. So they're not recent, but there was significant, war premium built into these numbers right now in the oil markets.
Yeah, I have been thinking about this supply demand equation for quite some time, and the Houston Strategy Forum hosts an upstream symposium every year. But I have not been able to figure out where that additional supply is coming, because you're absolutely right. SPR, the US SPR, released more than 260 million barrels last year. But that has stopped, and an additional 26 million this year. But those SPR releases are no longer happening. So it'll be interesting to see what happens the second half of the year if the deficits. Now we do know that the inventories, as you said, global inventories are going down. It'll be interesting to see what happens. Ashish, 2 days ago the markets. I don't have a better word. Was taken aback a little bit about the data coming out of China. Right. And so China suddenly, we were worried about a recession in the US, and pundits have been calling that for the last 18 months. And there is no recession in sight. They're still keeping hopes that maybe 2024 will be recessionary. But China certainly the data seems to be weaker. What is the underlying story there? Do you really see China is weak all over, or is it just the property market? What is happening? What is the story behind China?
So I think China has generally underperformed expectations in most sectors of the economy compared to the expectations that the revival would be quite significant and very steep, right, post the pandemic. You could see signals of that in the measures that the Chinese government is taking to revive the economy, for example, making, again, the property market easier to operate for home buyers and so on, and kind of reducing curbs on imports of various materials and so on. So the government is trying, and that is in itself a signal that the establishment in Beijing is not currently happy with the level of progress made in terms of economic revival.
Do you, China, you mentioned the billion plus barrels of oil that China has stockpiled. Is there a historical precedence for that, or is China, what are the motivations behind stockpiling so much? Were they just taking advantage of the marketplace? Were they siphoning off the SPR oil that was being released by the US and being opportunistic? Or do you see China because if China gets adventurous with Taiwan, that will have huge impact on commodity markets, not to mention the global economy. The US and China cannot afford, or if they have a skirmish, that can have global impact. So what is your read there? What is China really thinking? Is China preparing for something?
I wouldn't want to speculate politically what might happen there, but I'd go back to market fundamentals and kind of leave any speculation on geopolitics aside. But if you look at market fundamentals, I think, again, I think the government has been, in Beijing, has been, I would probably use the phrase misread the economic revival. Okay. And that is why now they're kind of taking measures to revive the economy again. And you can see that in all the announcements coming out of Beijing to revive the real estate industry, to revive the energy industry, and so on. So that definitely is happening. On the other side, though, I think we also have to be cognizant about what's happening with the new energy economy in China. Yeah. China is the leading market for electric vehicle sales. I think just last week or earlier this week, Chinese NOCs have started saying that they now see peak gasoline consumption on the horizon in the next couple of years, much faster than what they would have predicted a couple of years ago before the pandemic, right? And part of that is just weak consumer demand, but also part of it is the fact that China is the biggest electric vehicle market in the world, for example, and technology is progressing and consumer incentives are still being given for people to buy these new energy vehicles and so on.
I want to loop back now. We talked about the oil and gas markets. I want to loop back to renewables. You talked about solar and wind and other renewables and the investment that is happening, right? You said the highest level of investment, $1.1 trillion last year, and only growing, because projections say that we're going to need maybe $100 trillion between now and 2050 for all of this climate right investment and energy investment. So energy investment in renewables is growing. We saw oil and gas demand is growing. Is energy demand growing faster than what energy is being supplied? And where do you see that supply, both through conventional fossil fuels and renewable energy, will it be able to keep pace with demand? Is it growing fast enough, or are we going to see a disconnect, which will cause, because energy markets are so susceptible. We talked about this the other day, is energy markets are so susceptible, is a small shortage can drive prices haywire, right? And so where do you see that? Do you see supply and demand to be in lockstep, or are we setting up for some shocks?
So great question. And there are actually a lot of things to unpack in your question. So let me attempt to unpack a few things at least. So firstly, while $1.1 trillion is being invested every year now in clean energy, which includes investing in building new solar power plants, wind power projects and so on, but also consumers buying electric vehicles is a part of that number. That number is a good and handsome number, but if you want to get on a trajectory to get to net zero emissions by 2050, that number has to be 3 to 4 times of what it is today. Overall, our estimate is to reach net zero emissions. You need to invest anywhere between $190 to $200 trillion between now and 2050.
Oh, wow.
So that's a big number.
Yes.
Now, whenever I
Ashish, I have to share this. At the last Houston Strategy Forum in May, I stood up and said, there are reports which said that we're going to require $100 trillion worth of investment until 2050. And I asked my audience, all top-level executives, raise your hand on how many of you believe that. Ashish, I should not tell you how many people raised their hands, but I could count them, right? So, which was not good. I felt like a fool by stating, and now you have just shared that estimate could actually be twice that.
True, because look, it is, we have to appreciate a few things here. Firstly, the cost of clean energy technologies has been going down quite significantly over the last 10, 15 years. But they're not going down as fast as they used to in the past because of supply chain issues in those technologies and the significant surge in demand, right? Yes. So those things will take some time to scale up. So that's one issue, right? But the other thing is, there are some sectors of the global economy where the solutions are in sight and you can push for quick decarbonization, power sector being one of them, right? Mm-hmm. So today, in our estimate, 3/4 of global population lives in countries where it is cheaper to produce electricity from a new solar or wind power project compared to new coal or gas power project, right? Mm-hmm. But even to kind of decarbonize the power system, you need to really, really scale up investment in solar and wind technology. Yeah. But that's just the power system. Then you have to, essentially decarbonize transport, steel, cement, all the industrial processes. And you have to decarbonize aviation. In these sectors, the solutions are only starting to emerge and are currently not cost competitive in many places, right? If you look at, green or blue hydrogen, if you look at carbon capture and storage. And so to decarbonize the last 30, 40% of the global economy, requires significant capital expenditure as well. So these numbers will look huge. The 190 $200 trillion is a big number. I don't disagree with that sentiment, but we also have to put that in context, Ravi, right?
Yes.
If you look at the global economy is over $100 trillion a year economy, right?
Yes.
So, and you expect it to grow at a certain growth rate, right? So essentially, if you look at the size of the global economy between now and 2050, what you're saying is you need to spend anywhere between, I would say, 5 to 7% of global GDP between now and 2050 to basically get to net zero.
Yeah.
Is that a big bill? It absolutely is. But I've always said this to people that the cost of not doing anything would be multiples over this number.
Yes. You're absolutely right. Climate is going to be devastating. And you look at just what happened in Maui, in Hawaii over the last week. I mean, that is devastating, right? And the cost to rebuild, not to mention the human cost, right? But the cost of rebuilding Maui is just going to be enormous. And so the cost to have prevented those fires would have been a fraction of the cost it will take to rebuild it. I mean, there is going to be no comparison. The cost to prevent the fires would look like a rounding error compared to what it will take to rebuild.
And after you build the infrastructure, new infrastructure, you have to make sure it is climate resilient new infrastructure.
Yes.
I don't know how the insurance companies will look at this in the future. And I'm pretty sure the cost of insuring the new infrastructure would be higher than what it would have been in the absence of this unfortunate event.
And insurance companies we are seeing that as a homeowner, I'm seeing insurance companies scale back the areas that they're covering, the coverage that they're giving. So they're moving back. Homeowners are going to be left with increasing amount of risk, right? And climate change is going to affect all of us. And so your point is well made, is that anything that we spend on driving climate change and making sure that we have energy that is managed well is going to be absolutely critical and necessary to make this happen. Ashish, I cannot wait to host you on August 31st. I think that we have, I feel like we can begin to talk and open up. There are so many areas to open and dive into. We're looking forward on August 31st. I hope everyone will join us at this Energy Evolution Symposium on August 31st, so they can come visit with you, understand what you know about these markets and how you're watching. It is going to be a great discussion. Sir, what is the message that you would like to share on August 31st?
So again, lots of things on kind of mega trends that we'll talk about, but I'd leave you with two things, Ravi. Firstly, I think we have to understand in the energy industry that the direction of travel is clear towards lower carbon energy. The speed isn't, and I appreciate that. And that's a challenge for a lot of executives. And we ourselves spend a lot of time thinking about when certain tipping points are hit between kind of traditional energy and new energy and so on. So we'll kind of unpack that, some of that on 31st. And the second thing I'd say is I hear a lot of rhetoric saying that the need for energy in emerging economies is still growing, and therefore certain traditional forms of energy are heavily required in those economies. And I think that's an interesting argument to make for some people, but having spent 18 of my 20 working years in emerging economies, I think the emerging economies will not follow the same trajectory of energy use that Western economies have. To give you a final quick example, we talked about passenger cars and how much electric vehicles are as a percentage of passenger car sales globally. I said 79.5 million passenger cars are sold, and 14% are electric. Think about two-wheelers for a second, though. 88 million two-wheelers are sold globally. That was the number in 2022. Three emerging markets, China, India, and Indonesia, are 77% of that 88 million sales number. And electric vehicles are not 14% in two-wheeler sales, they're 41% in two-wheeler sales already.
In these three countries?
In overall globally, but
overall
these three
globally.
countries, out of the 88 million two-wheelers sold globally, electric two-wheelers are 41% already. And three markets are basically China, India, and Indonesia are 77% of that overall 88 million number. So if you assume that emerging economies are supposed to follow the exact same pattern of energy usage, energy supply sources, energy infrastructure build out, I think you're making a dreadful mistake. That's not going to happen. And I'm sure we'll kind of pick on this and talk about that.
Yes, I want you mentioned at the outset of our conversation that you're going to be in India as part of the G20. Indian leaders have made the goal, have declared this goal that they want India to become an hydrogen exporter. Right, this is a country with 1.3 billion. I thought that was an audacious goal. It's a big, hairy, audacious goal, a BHAG. Not just to say, well, we're going to produce enough hydrogen for our internal consumption. They say we are going to export it. And I have been scratching my head trying to figure out how is it that India will become an exporter of hydrogen. Maybe you have an insight there now, or on August 31st when you get some.
We'll surely talk about that. And I don't think the government is saying we'll become. I don't think they want to right away aim for using all the hydrogen domestically and also make some for exports. I think the logic there is, in certain places, you might get better value in the export markets, and it is better to export rather than to consume domestically. But final thing I'll say on hydrogen, interestingly, is one of the biggest companies in India, owned by one of the richest people in the world, has publicly come out and said that they have a target of 111, which basically means $1 hydrogen for every kg in the next 10 years. And so governments will come and say a bunch of different things, and they will provide the policy toolkit and subsidies and incentives. But if private companies, which are big conglomerates in an emerging economy, are going after this trend, then obviously, again, as I said, the direction of travel is clear. The speed may be debatable, but the direction isn't anymore.
No, and I appreciate that, because if I get the drift, this same business leader is the one who brought cell phones and drove the cost where every Indian, regardless of their poverty level, is able to buy a cell phone. And so, the cost of cell phone and being able to be connected is down to the cost of buying food, right? I don't know if that is true or if I'm exaggerating, but it's a really low cost, right? And so that transformation is amazing to see.
Yeah. One observation I had while from my last trip to Asia in February and March, I spent a whole month traveling in the region, is that the new age leadership in different economies in Asia, you go and meet some of these big conglomerates which have significant contribution to GDP in countries like Indonesia or Thailand or India and so on. That new age leadership is quite aligned to the new energy reality, and they are not the ones who will sit around and argue the case for the traditional system being the best. They are people who are now taking things in their own hands and making investment decisions which are in line with the new energy reality of those countries.
Ashish, August 31st, the debate is going to be so exciting, because we're going to get the executives who are on the other side of this argument. So I can't wait. This is going to be one lively debate. Ashish, please come all charged up. Make sure your supporters are in the audience so you can feed off that energy. I think I'm going to love this discussion August 31st. I appreciate you, sir, so much. I hope everyone who is watching this video today will join us on August 31st. Come engage with Mr. Sethia. This is going to be powerful. Thank you, sir. I appreciate you so much. Thank you for taking the time today. Looking forward to seeing you August 31st.
Thanks so much, Ravi.